But talking about all of these small caps companies, one such company which has posted a flat revenue print in the second quarter as the low volumes and softer realizations weighed on performance. We saw the impact with revenue down almost remaining flat, while EBITDA was down about 0.7% and margins at around 10.2%. Net profit also stood at about 26.9 crore versus a loss figure of 64.6 crore. Now, revenue, if we see, has remained flat due to lower volumes and softer realizations, while weak performance from the BOPET packing film segment also weighed into that flattish growth that we are looking at. So that's with regards to what's happening with UFlex. We in fact have the management, Rajesh Bhatia, the group president and CFO of the company, joining to discuss all that's happening with the company and the outlook forward as well. Mr. Bhatia, thank you so much for taking out the time and speaking to NDTV Profit. I just want to start off the conversation by asking about the FY26 guidance that you have lowered now. So now revenue growth is expected at 5% versus the earlier guidance of 10%. Even for the second quarter that we've seen almost flattish set of results. Just want to understand what's been happening in the sector as well as what's the outlook forward.
So I think Q1, as we had shown, we had decent, growth, what we saw in Q1. And still on an H1 basis, we better than on a YOY basis. But Q2 has been flattish, largely because of the headwinds that we all faced. We have exports to US. So the tariff things was always creating a sort of barriers. Then you had a GST transition in our industry. So the FMCG products. Once you have that transition, the new packs are ordered. When the customer has clarity over what the MRP is to be printed. So this, and then on top of that, we had, because of the trade tariffs and all that, we see a lot of upheaval in terms of that, the suppliers which were earlier exporting to US, they started also looking at the new market. So the Europe was, for us, was impacted a lot. And all this led to, a sort of a flattish growth as we see. We normally have from Q1 to Q2, we always have some seasonality also setting in our aseptic packaging business, though on a full H1 basis, we had a much better, at least 5.5% volume growth as compared to the H1 of the last year. So I think the headwinds largely are responsible for this flattish performance. And I think GST is surely gone. The tariff is also going to be settled, sort of quite soon. So I think, this is just a passing thing, and, this will be beyond us. We are also very close to implementing the projects which we had announced earlier. So they will also set in, revenues and profitability.
Right. Right. As you were mentioning that these things will pass on and things will start looking better for UFlex. So any guidance that you could share with us for FY27? Because I believe that H2 could also be weaker given the fact that you have already lowered the guidance. But for FY27, what is the outlook that you're seeing? Where are you seeing your revenue growth to be for the next financial year?
So I would say that, with the new projects that we had done, 4 projects were in offing. The first was aseptic packaging, debottlenecking in India, which takes our capacity from 7 billion packs to 12 billion packs. That we already completed in October. Then we have a 12 billion packs greenfield aseptic packaging facility coming up in Egypt. We have WPP bags facility coming up in Mexico. And we have the recycling facility coming up in Noida. So all these are at a very advanced stage of completion. So I think by probably by FY26 and or first quarter of FY27, we'll see the all these are implemented, and then from these four only we expect that these will give us additional revenues of about 3,000 crores and a bit of foresight of about 500 crores. So this will set in partially in FY27 and FY28. We are likely to see the full impact of these investments yielding revenues and profit. So that's the guidance, I can at present give it to you.
Anything on the EBITDA front that you can give?
I think EBITDA, we will look at about 12.5% for sure.
Right.
Okay, so just want to understand, so this 12.5% of EBITDA margins that you're giving, along with that 3,000 crore of incremental revenues, are these at peak utilization levels is what we are seeing? If you can give us perspective on that also, because most of these additions will happen in FY27. So just want to understand the utilization levels as well.
So I think first year we can see about 60% utilization levels. And the next year we can see about 85% utilization levels in all of them.
Okay, got that. And even in terms of the capex that you've outlined for all of these projects which are going, that's roughly at the size of around 2,000 crore or odd. So want to understand currently how much capex has been spent, and would there be further requirements for all of these additions that you're making?
I think we've spent about 1,000 crore more we need to spend to complete these capex programs, so which will be done in the next 6 to 9 months.
Any funding requirements for all for this further 1,000 crore or so?
Yeah, so typically what we do is when we set up the project, we first contribute our equity. So normally we do it depending on the project lender's requirement between 20 to 30% equity, and the rest is the debt. So on an average basis, you can say 30% equity and 70% debt. So having already funded the equity, it's the debt which remains to be drawn of say about close to about 1,000 crores, which will come on the balance sheet.
And so I believe already the debt number is a bit high at around 7,700 crore. What are your plans to reduce this?
So we have annual repayment of about scheduled repayment of about 14 to 1,500 odd crores every year, FY27, FY28. So I think there'll be, so even if I say we were to add a debt of about 1,000 crore for completing these projects, during the same year, we'll have 1,500 crores of repayment also. So the net debt addition will not be there. So we'll start to paring the debt down, and subsequent years, obviously with the repayment setting in, the debt numbers will be down for sure.
Any target that you have in plan, say by FY27, and by how much do you expect your debt to be lower?
So I think we are not having guidance on the absolute number. So we feel that, we felt that we will have an EBITDA of about 2,500 crores guidance in FY27, FY28. And if we achieve that even this present number we will look at a debt to EBITDA of 3x, which is a very comfortable situation. So I think we'll be happy at around between 3 to 3.2, 3.5, and we'll achieve that in FY27, 28. We'll surely achieve that. And as I said that, these projects as they grow, their revenue and their EBITDA will also, come into our financials. So we'll be pretty much sure that at a 2,500 crores of EBITDA with 7,700 odd crore of debt, is the matrix which works out to about say 3:1, which is very comfortable.